This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live across Bloomberg platforms. Carol Massar, Tim Stenovec. We are back together again.
We are.
It feels like it's been a while.
It's been a while. This happens in the summer.
It does.
You go on vacation, I go on vacation. I go somewhere for work. You go somewhere for work.
Yeah.
It's good to be back.
We're a team, though.
You sounded great yesterday.
Thank you.
I was listening.
I did.
From Atlanta, where I was with the Business Value of AI event.
And
we'll talk about that a little later. It was pretty cool.
Are people still all in?
People are all in.
All right.
Oh, yeah.
We definitely have to talk about this. Hey, we're also going to talk about U.S. Treasury Secretary Scott Bessent stopping by Bloomberg headquarters. An in-depth conversation. We've got two of our best, Erik Schatzker and McKee. We're going to talk about what the Treasury Secretary had to say against the backdrop of that Bloomberg Businessweek cover story that Erik and Dan Flatley did on the Treasury Secretary. So we're going to get into that in just a moment.
Plus, another on-the-ground perspective when it comes to rare earth minerals with the CEO of U.S. Antimony joining us in just a few minutes.
Did you talk rare earths and AI?
They did not come up.
Okay.
But they should have.
Yeah, they probably should.
Yeah.
That's okay. Hey, we're also going to get into the upcoming U.S.-Russia meeting. That is another focal point for investors this week. First up, though, let's get a check on the trade. We've got bonds rallying, stocks not so much, but holding near record levels. Take it away, Charlie.
I got you covered. Reunited, and we all feel so good, especially feeling bullish right now with the Dow, the S&P, NASDAQ all advancing, but BLSH on the ticker. Got to begin with that IPO because that stock pushing higher now by 146%. Bullish up and running. We are seeing circuit breakers, have been seeing circuit breakers with the Peter Thiel back firm rising as much as 217% from its IPO price of $37 a share, but bullish right now, again, advancing by 146%. Out of the gate at 37 right now, 91.32 on bullish. The Dow, the S&P, NASDAQ, they're all higher. NASDAQ 100 index is retreating, little changed, pulling back from a record. We've got NASDAQ, though, at a record, up 18, gain there of 0.1%. S&P keeping it all in context, up 7, up 0.1%. And the Dow up 303 right now, higher by 0.7%. Your 10-year at 4.24%, with the 2-year 3.69%. Gold little changed, up 0.1%, 33.52 the ounce. West Texas Intermediate crude oil down 1%. WTI 62.52 for a barrel of WTI. Bitcoin closing in on $122,000. Bitcoin right now at 121,844. Bitcoin up by 1.4%. Briefly, after earnings, we got CoreWeave down 17.9%. Kava after earnings, that stock down 15.8%. And coming up after the close of trading, Cisco Systems. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And another check on bullish. It is up about 148% in today's session. We know first day of trading, and it's moving around a lot. All right, folks, let's get to it because President Trump saying he will name the next Fed chair a little bit early and is down to 3 to 4 picks. Now, the subject of the Fed monetary policy definitely top of mind when the U.S. Treasury Secretary Scott Bessent stopped by Bloomberg headquarters this morning in studios. He made his most explicit call yet for the Fed to execute a cycle of interest rate cuts, suggesting the U.S. central bank's benchmark ought to be at least 1.5 percentage points lower than it is now. The Secretary of Treasury speaking on Bloomberg Radio and TV on Bloomberg Surveillance with Jonathan Farrow and Anne-Marie Horton this morning.
What if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden, it was hard to know whether, TDS was a Trump dementia syndrome or Trump derangement syndrome or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting.
All right, that, of course, was U.S. Treasury Secretary Scott Bessent earlier on Bloomberg Radio and TV with the surveillance team of Jonathan Ferro and Anne-Marie Hordern here in our studios earlier. Hey, let's get to it, because there's a lot we want to unpack from what we heard from the Treasury Secretary. Bloomberg New Economy Editorial Director and Editor-at-Large at Bloomberg Businessweek, Erik Schatzker, is in the house. He, along with Bloomberg Treasury reporter Dan Flatley, wrote the BW cover story on their conversation with the Secretary. You can catch that on the Bloomberg and at Bloomberg.com. Also with us, Bloomberg TV and Radio, international economics and policy correspondent Michael McKee, both here in studio. A lot to get to. First of all, Erik, let me start with you. You sat down, you spent a lot of time with the Treasury Secretary. It sounds like, this is a lot of what is in the article that you guys wrote, but I'm just curious, how his role in the administration, what is it all about when he comes on an audience or a network like Bloomberg or even some of the competitors? What is he trying to do, especially when he's speaking to a really smart investment audience?
Well, first and foremost, he is speaking on behalf of the president and trying to drive his agenda. That is his job and the job of every cabinet secretary working for President Trump. In theory, it's the job of every cabinet secretary working for any president. But there has, it would appear, been room for a little more debate and disagreement in previous cabinets than there is in this cabinet. So that's number one, right? It's a salesmanship job. He's out there advancing president's objectives, president's policies. And as we've seen, he's also a tool, if you will, for the president's style, negotiating style, or even the manner in which he shapes public opinion, which is to drive people to extremes and then ultimately pull them back a little bit.
I mean, that was a big takeaway that I had, Erik, from the cover story that you wrote with Dan, was the risk tolerance for President Trump and the way that the Treasury Secretary talked about President Trump's risk tolerance with regard to
being higher than his,
a hedge fund manager who spent years taking on big bets, working with George Soros and others. And that's the whole idea behind the tariff negotiating strategy.
To a degree, sure. There's there are clearly differences in the way you manage risk as a hedge fund manager who has a fiduciary obligation to clients, and the way you think about risk and reward and making bets on outcomes as the president of the United States or as a policymaker in cabinet. And there's no doubt that in Scott Bessent's mind, Donald Trump has a higher risk tolerance, but it's a risk tolerance, again, I don't want to put words in his mouth, but as explained to us with a purpose. In other words, let's see how far I can push people so I know where their limits are, and then I can pull it back to something that they're comfortable with, but only comfortable with because they felt what it was like to be scared.
So is he taking a risk, Mike? I want to bring into what he said. He talked about the Fed working off of data that's not of higher quality. Is he taking a risk in that I don't know what he's looking for. Like, we all think the U.S. data, the world thinks the U.S. data is the gold standard.
Until Friday, we thought that. Now the narrative is that, wait, this data is lumpy. This data is not good.
Right.
It needs to be paused.
He's saying we should have had then cuts in June and July.
Which is the other Trump thing, is throw so much stuff out there that you confuse people and you get people to think that the truth is not the truth. I mean, these are the gold standard data around the world, and while they are somewhat less scientifically valid than they were because the response rates have gone down, they are still extraordinarily accurate. Revisions are a part of it. So this is, I mean, it's truly an effort. The whole BLS firing thing is an effort to confuse Americans about what's going on with the data, so that when the data look bad, Trump can blame the data rather than his policies. So for Scott Bessent, he has to go along with that. But what he wants from the Fed doesn't comport with the way the Fed is looking at it.
He also made reference to Alan Greenspan. He said he's not willing, meaning Fed Chair Jay Powell, he's not Alan Greenspan, who is very forward-thinking. They're trying to be more data-driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. We heard that. Mike first, and then Erik. I mean, we've all been around since Greenspan, all of us. There's a lot been written about perhaps the actions that Alan Greenspan took as Fed chair in the lead up to the great financial crisis, the mortgage meltdown. Is that a good reference point, Mike, for the U.S. Treasury
Well, it's an interesting question. I don't think most people listening these days anymore really remember a whole lot about the Greenspan years or Greenspan's role in it, other than those of us who were very closely tied to it. But he did, in the 1990s, suggest that inflation was going to be low because productivity was picking up because of personal computers. And that was the thing that got him the fame and the lionization in Washington and on Wall Street. And then, of course, he had the oops of, no, there's not going to be a housing crisis. And so, yeah, I don't know if it's a good comparison or not. The one thing you can say is that Greenspan, unlike his successors, was very forceful and basically kind of ran the Fed in the direction that he wanted it to go, which is not something that Jay Powell does, and it wasn't the way Ben Bernanke or Janet Yellen are.
Erik, are you, given the reporting that you and Dan Flatley did, the folks that you spoke to within the Treasury Secretary's orbit, they seem to express a little surprise that he has not just joined the Trump administration, but that his views seem so in line with the president's views right now. How do you explain that?
In two ways. The first is there's no question that Scott Bessent's point of view and the things that he says to back it up have evolved over the course of the past, at the very least 7 months since he became Treasury Secretary, and even before that. As of last year, I remember interviewing him a little more than a year ago, and he was talking then about the sense or sensibility of a 10% global tariff. And he was also then talking about the goal of getting debt to GDP ratio down, you know, as far as the federal debt is concerned, and also the percentage of, you know, the size of the deficit, the annual deficit relative to GDP, as a goal of under 3% and by the end of the president's term. The fiscal discipline has sort of gone out the window for the time being with the One Big Beautiful Bill. Bessent will tell you that if the bill is successful, and he believes it will be, in deregulating the American industry and thus supercharging some kind of domestic manufacturing renaissance, then you'll get a change in the relationship between the numerator and the denominator. And in fact, yes, deficits will start to fall as a percentage of GDP over time. So he hasn't totally walked that back. On the subject of tariffs, he now talks about how the president's maximum pressure strategy is what has allowed the United States to achieve these deals on paper with countries like Japan, for example, and South Korea and others. And we'll see if those terms stick and exactly how these novel terms unfold in the way of real substantive agreements. But, and again, this is not to sort of come out in his defense. That's not our job. But I would point out that at the moment, the global tariff rate is 14%. Right? It's not that far off of 10%. I mean, 4 percentage points is 40% higher than 10%, but it's not 25% and it's not 39%, which is, of course, what the Swiss appear to be headed for at the moment. So it's shifted, but it hasn't shifted to an extreme place, if that makes any sense. Does that help to answer the question?
It does.
And of course, and I would just say that, yes, the reason that people around Scott Bessent are surprised by the fact that he has come out, that he's in the administration and that he went out for President Trump in the first place on the campaign trail and fundraising for him, is because they thought that he was a little closer to who they think of themselves as, which is a Reagan Republican. Mm-hmm. And the truth of the matter, as we demonstrated in our reporting, is that even over the past 10 or 15 years, he has held different points of view. He just hasn't shared them with everybody.
We're speaking right now with Bloomberg New Economy editorial director and editor-at-large of Bloomberg Businessweek, Erik Schatzker, along with Bloomberg Businessweek, or Bloomberg TV and Radio International Economics and Policy correspondent Michael McKee.
Speaking of productivity, just a quick headline. Apple planning to come back in artificial intelligence with new devices, including robots, a smart speaker with a display, and home security cameras, according to folks in the know. This may be a little bit of what some say, maybe.
Does it do the dishes?
Not yet.
But it will be an AI Fed chair.
But exactly.
Well, Shadow AI Fed chair.
Okay, we only have a few minutes left here, and I guess every time I listen to Scott Bessent, I think about someone who understands the importance of an independent Fed, understands the role of the U.S. central bank in the world. Do you feel like, Mike, that he understands that, and that if it gets a bit wonky or gets very political, that there will be market implications, not just U.S. market implications, but global market implications?
Well, I think Bessent knows that very well. I mean, he's not dumb.
But is he a guardrail around the president with that?
Well, no, there are no guardrails around this president anymore. He can tell him all he wants, but there is only one leader, and
Decider-in-chief.
That leader does not care about, well, he may care about a market collapse, but he doesn't care that, the Fed is independent. He believes he's the boss.
Well, to that end, is it rare for the Secretary of Treasury to actually weigh in on interest rate policy from that position?
Well, of course it is. It hasn't been done in decades. I mean, we got officially into the government doesn't, the executive branch doesn't comment on the Fed during the Clinton administration under Bob Rubin, and it's been that way pretty much ever since. But
until first Trump term.
But this is not the usual presidency. This is Donald Trump's presidency, and it is completely different from anything we have seen before.
Erik, forgive, 35 seconds. Scott Bessent passed on being Fed chair, right? That's at least what we've reported. Mm-hmm. Do you think he understands the importance of an independent Fed, how important it is globally?
Yes, he talks about it being a jewel box. And by the way, the reason he passed on being a Fed chair is because he finds the job that he's got now way more interesting.
Head of the IRS?
I think he thinks of the job of the Federal Reserve Chairman, particularly if all you're really supposed to be doing is setting interest rates, as relatively speaking very one-dimensional.
Great stuff. Guys, thank you so much. So appreciate. Erik Schatzker, editorial director of Bloomberg New Economy, editor-at-large for Bloomberg Businessweek. Michael McKee, international economics and policy correspondent at Bloomberg TV. Check out the full Bessent interview, Secretary Bessent. It's on the Bloomberg. Next, rare earth minerals.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got crypto exchange bullish shares surging up and running. BLSH bullish on the ticker. And right now we got bullish up by 135%, went out $37 a share, rising as much as 217%. But again, the Peter Thiel-backed firm now pushing higher by 135%. And a developing story is Apple said to be planning a comeback in artificial intelligence with new devices, including robots, a smart speaker with a display, and home security cameras. This according to sources, and that's reporting from our Mark Gurman. Apple shares right now up by 1.2%. The Dow, the S&P, NASDAQ all pushing higher. NASDAQ has been swinging between gains and losses. In fact, the NASDAQ 100 index is lower now, down under 0.1%, but NASDAQ up 13, a gain there of 0.1%. S&P putting it all in context, up 10, up 0.2%, and the Dow up 385 now, up by 0.9%. S&P, NASDAQ both at records. 10-year 4.23%, the 2-year 3.68%. Spot gold up 0.1%, 33.51 the ounce, and West Texas Intermediate crude down 0.9%, 62.61 a barrel. Help wanted at Tesla in New York City, looking to hire someone to test its driver assistance technology on the streets of the Big Apple, suggesting the car maker could be looking to expand its ride-hailing services to the largest American city. Tesla shares, they're lower now by 0.2%. After the bell, Cisco Systems. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, U.S. Antimony reported earnings last night. The stock selling off today, down as much as 10%, despite a second quarterly sales beat, and a jump from last year. So you might be scratching your head a little bit and wondering why we are talking about this company today. It's not a household name, got that. We do, though, talk an awful lot as of late about the race for rare earth minerals and the U.S. amping up its own access and supply. And it is companies like United States Antimony and its CEO that gives us an insight into the pursuit of rare earths, what's going on, and how the U.S. gets where it needs to be. We welcome Gary Evans. He's chairman and CEO of United States Antimony Corporation. It's a small cap miner, $432 million market cap. Shares have more than doubled this year, and he joins us from our Bloomberg News Dallas bureau. Also with us is Bloomberg News economic statecraft reporter Joe Deaux. He is our go-to when it comes to all things rare earths. He's here in studio. Gary, welcome. You're not a household name, but I feel like we need to know more about what you are up to. Tell us about your operations, the mines, what you predominantly do right now.
I'm sorry, we're having really audio problems. I can't even hear your question.
Okay, we're gonna fix that. In the meantime, we're gonna bring in our Joe Deaux, because Joe, I do think there are these smaller names. We may not know about them. They're publicly held. Obviously, investors are noticing this company this year. Tell us a little bit about this company and kind of its role in terms of mining and potentially rare earths.
I think U.S. Antimony is a good example of this kind of microcosm of all of these critical minerals and rare earths companies that are suddenly getting attention from Donald Trump and the White House. I think bottom line, that's the first thing to know. Why would you care about a U.S. antimony company? Well, you probably wouldn't, but Donald Trump cares about critical minerals. Antimony is a critical mineral. What it's best known for, antimony, is a use in hardening bullets, ammunition. Antimony has always been important to the United States Defense Department, and that's why they are on the radar all the time, as particularly U.S. Antimony.
So, Gary, my understanding is we figured out our tech problems. We are talking with Gary Evans, chairman and CEO of the United States Antimony Corporation. He's there in our Dallas News Bureau. So, Gary, tell us about your world. And I am curious, are you in this pursuit by the U.S. to amp up its rare earth minerals exposure and capacity if the U.S. government is reaching out to you?
So, first of all, it should be a distinction. We're in the category of critical minerals. There's critical minerals and there's rare earths. And so the public really needs to understand there's a significant distinction. Critical minerals, as an antimony producer, we're #1 on the DOD's critical mineral list. And the problem is there is no antimony today being mined in either the United States or Canada. It all has to come from international sources. We were all getting, every country in the world was getting most of their antimony from China. China controls 65% of world antimony ore, the raw ore in the ground, and they control 85% of the downstream processing, which is what we do. So fortunately, we're in a position of having a smelter in Montana and one in Mexico, which makes us the only two operating smelters for antimony in North America. And therefore, as you said earlier, we're getting a lot of attention from the U.S. government. They want us to expand our operation. I think I read a report in April. We only have like a 5% supply in our stockpile. So we're trying to ramp up our business to meet this critical need. And as Joe said, there's no question that antimony is needed by the military. It's used predominantly, as he said, in bullets, but it's also used in laser-guided missile, night vision cameras, night vision binoculars, and what have you. So it's a very necessary element for the military.
Hey, Joe Deaux, come on back in here. We heard from Gary just now that the antimony mining is not done here in the U.S. or in Canada. Is it possible to do it here in the U.S.? Do we have the material to mine it? It's just not done for environmental reasons. It's not done because we don't have the mineral rights to it, or the companies don't have the mineral rights to it. Like, why has this been moved to China? I understand from a processing perspective why that's happened with rare earths.
Yeah.
But with a critical mineral like antimony, why is that not happening here?
Well, I mean, I think you go to deposits, how good is the deposit, and you can pull it out of the ground, and then who can process it? And this is a question that I have talked about now quite a bit with Gary over the last few months. And, Gary, I think you're better positioned to talk about that to an investor class. I mean, you talked to your investors yesterday on your earnings call, and they asked you about the potential of beginning mining in the United States anytime soon. And you effectively told them probably it's not going to happen anytime soon. So where is kind of the upside here?
We've been working on acquiring leases in both Montana and Alaska. We've acquired close to 30,000 acres of property in Alaska, and we've taken over the mountain area where our smelter is. It used to be an area that we mined some 20 years ago. So it's coming. Right now, we're held up by permitting. We filed permits in Alaska back in May. And so getting back to your question, why isn't this being done? The EPA and the federal government, whether it be the Forest Service, the BLM, native tribes, everybody tried to stop mining in the United States. And unfortunately, our laws allowed that. And that's why you see mining occurring all over the world except the U.S. It's coming back. And there's no doubt this administration is very pro-mining. And we have the resources. There's no question that we can meet the demand for the United States with just our Alaska properties. We have no doubt about that. And that's going to happen soon. I would think in the next 30 days, we'll be able to bring our first loads of antimony by truck from Alaska to our facility in Thompson Falls, Montana.
Gary, how would you describe the conversations now with members of the Trump administration with this government versus your conversations during the Biden administration? How are they different?
Well, we started talking to the Department of Defense back last September. This was right when China banned all antimony sales to any country in the world. And of course, our Department of Defense was getting all their antimony from China. So it raised a lot of red flags. And we've been negotiating various agreements and contracts with the Department of Defense and the DLA since that period of time. As we mentioned on the call yesterday, we're very close, we think, to announcing some things. It's not done yet. But there's definitely a mindset change addressing your question from the Biden administration to the Trump administration. For instance, we'll have to respond to a request from the DOD, and they say, can you have it to us by Friday? We give it to them Friday at 5 o'clock, and by 8:30 Monday morning, we have a red line response. It's not very often you see the government working over the weekend. So there's no question this is a high ticket item with our existing administration, and there's a fire been lit.
Gary, despite the fact that you're getting a lot more attention from the Trump administration and they seem to be speeding things up, I'd still ask, what is the holdup? And I know this was a big question you got on the call yesterday with investors. They kind of seem to be saying, when are you going to get some sort of announcement from the government? What's going on?
We're in a period where contractual changes are being made. There was an open comment period with respect to the DLA that ended actually yesterday afternoon. So I'm very confident we're near the finish line, but it has taken an inordinate amount of time. And there's been a lot of reasons that I can't really talk about today for that delay. But we have to make sure that whatever contract or whatever agreement we sign with the government is beneficial to our shareholders. In the first drafts, we're not. And so we had to make sure that we negotiated as best we could to maximize the value for our shareholders, but also give the federal government a fair trade. We pay taxes, we know, and so that was very necessary.
Forgive me if I missed this, but is the agreement that you might be working out with the government akin to what we saw with MP Materials, which has a $400 million equity investment by the Department of Defense into the company? And we know that MP Materials is certainly working specifically in the rare earths materials area. So could it possibly be that the government, DOD, makes an equity investment in you guys as part of an agreement so that you can do what you need to in terms of ramping up either production or your facilities? So
obviously that's on the table, I think, with us as well as a lot of other companies. I think we're in a little bit unique position in that we have a $450 million market cap. We have our own cash. We have our own capital. We need, more of a big brother than a huge capital investment. Now, as we ramp up this year and do the things that we've told the public we plan on doing and the DOD, I think there's a very good chance in 2026, if we want to do another smelter, if we want to do another project, we also are involved in tungsten and cobalt, two other critical minerals, then those type of opportunities exist. But what we're negotiating today and have been for the last 8 months is something different. It's very positive for our company, but it's not a direct investment by the government.
Gary, I want to kind of bring people into what's at stake here, or at least what is being said is at stake. As you mentioned, the Chinese officials put an export control on antimony, which came well after the germanium and gallium that so many people talked about a couple years ago. Have you guys experienced any of these effects of export controls on antimony from China?
Yes, unfortunately, we have. We were acquiring material from a company out of Australia, and we were taking that material, they're 55-ton container loads, to our smelter in Madero, Mexico. And that particular, this third load that we had acquired was transloaded over in China in April. And the Chinese customs confiscated our container, took it off the ship, and held it for 90 days, gave us no reason. All the paperwork was correct. It had been paid for. And we finally had to get the State Department and the White House involved. For some reason, finally, they released it. It showed back up in Australia, did not come to us. They sent it back to Australia, arrived there about 3 or 4 days ago. It's currently on a ship to Mexico now. So from now on, obviously, whoever we buy antimony from, we are putting in our contracts, they cannot stop in China because China did this for whatever reason. We know this company used to sell antimony to China. Maybe they were mad. The fact that it said U.S. antimony on it maybe ticked them off. I don't know. But they definitely made a statement with what they did.
We're speaking with Gary Evans, Chairman and CEO of United States Antimony Corp. Also with us, U.S. economic statecraft reporter Joe Deaux.
Gary, a follow-up on that. I mean, what does this really say? Should people actually be concerned? I mean, eventually your antimony is getting to you here and at your Mexico location. Are we sounding too many alarm bells on this front?
I don't think so. I doubt in our lifetimes we'll ever see antimony coming out of China again. We know their largest mine was depleted last year.
Ever?
And so, ever. I don't think we'll ever see antimony coming out of China. There is truly a worldwide shortage of this product. It is so difficult for us to find product. That's why we went and started mining it ourselves. There's just not any supply.
Presidents love to talk about energy independence. It doesn't matter if they're Democrats or Republicans. Do we get to a point where they can talk about antimony independence and we can get 100% of what the U.S. needs from U.S. supplies?
I have no doubt that we can meet all the needs of our government as well as our industrial customers from Canada, the United States, and Mexico. We don't need to go anywhere else.
When will we be able to do that?
In the next 3 to 5 years. It's not going to happen overnight.
You know, in the last few years, you would have said Canada, United States, and Mexico, and I would have thought, okay, that could work. These countries can all work together. But over the last few months, we've seen trade tensions flare, especially with our neighbors to the north and our neighbors to the south. How does that affect the way you look at the industry and your own business?
No question that, you know, Mexico has a new president. She's very anti-mining. Fortunately, the mines that we have in Mexico are grandfathered, but, you know, there needs to be greater collaboration. Now, the DOD looks at Canada just like it was the United States. So any project we find up there, the DOD likes it and looks at it as a domiciled country.
Yeah, wait, is that as a separate country or because they want to take it over?
Well, you know, the 51st state, of course, is what I'm talking about.
No, I'm just... So you're saying relations between the two nations are comfortable, and they, despite what we have in the headlines, you're saying that they are working and cooperating because they understand they kind of need each other.
Yeah, well, Canada needs antimony just as bad as the United States needs antimony, and Canada is a very pro-mining country, so that's why we have a lot of activities, like I mentioned, in tungsten and cobalt in Canada.
Gary, these conversations you have with defense officials, how dire are they indicating to you that the antimony shortage is for them?
When you see the announcements we'll be making, you'll understand it's pretty dire.
Can you give us?
We have the lowest. Yeah. We have the lowest amount of antimony supplies in the inventory for our government since World War II. You got to remember, we're funding Israel, we're funding Ukraine, and we've dwindled our supplies. And at the same time, China cut us off. So it's a double-edged sword. People are waking up that, hey, we have a problem.
All right, we're going to have to leave it there. I got to say, this is one of those interviews. I know Joe knows this stuff, but I certainly take a lot away from it. Great, Gary, thank you so much. Gary Evans, Chairman and CEO of U.S. Antimony, joining us from our bureau in Dallas, and of course, our in-house expert on all things when it comes to mining, Bloomberg News economic Statecraft reporter Joe Deaux. By the way, shares of U.S. Antimony, Tim, they're up about 117% year to date.
They still had Apple's AI comeback. Speaking of stocks higher, the stock spiked after Mark Gurman's latest report. He's going to join us in just a moment. First up, though, a check on the trading day. Here he is, Charlie.
Thank you very much indeed. Apple shares right now up by 1.3%. Let us talk bullish. It is the crypto exchange, BLSH on the ticker. It's a Peter Thiel-backed firm, rising as much as 217% from its IPO price of $37 a share. Right now, BLSH bullish, up by 123%. Stocks higher. S&P right now up 9, gain there of 0.1%. The Dow up 403, up 0.9%. Could see a record close out of the S&P. Nasdaq little changed, up by 3 points. 10-year 4.23%. Spot gold up $4 the ounce, up 0.1%. And West Texas Intermediate crude lower now by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, everybody. Thank you so much, Charlie. Hey, we want to get to Apple. Headline crossing just a moment ago. Apple plotting its AI comeback, artificial intelligence, with an ambitious slate of new devices, including robots and a lifelike version of Siri. There's a lot more. Let's just get to the guy who knows this company and put out this story. Here's our own Mark Gurman. He's Bloomberg News managing editor for global consumer tech. He's out there on the West Coast. All right. Walk us through your exclusive. What did you learn about what Apple is up to when it comes to AI, Mark?
So the conventional wisdom is that Apple is lagging right now. It has no future. The product pipeline is, very limited. They're struggling in AI. The world is ending, and Tim Cook should be fired as CEO. I think I came on here a few weeks ago to tell you that there's no way Tim Cook is going anywhere. And it is true that they are struggling terribly in AI. But at the end of the day, Apple is a hardware company, and they have been planning this big new hardware pipeline. At the center of it is robotics, a push into smart home and home security, multiple new versions of Siri, and a slew of other devices from smart glasses to headsets to foldables. The centerpiece of the renewed AI hardware strategy is a tabletop robot. That's coming in 2027, sometime around then. This is a device that would sit on your desk, sit in your kitchen, sit in your living room. It would have an iPad-like display with sensors and a robotic arm. And the arm would be able to push the display around the room to follow people, to look at you, to summon you, or be summoned by you. help you get work done throughout the day. The idea is to bring artificial intelligence to life in a way that hardware companies have not done so before, blending the AI with hardware manipulation and robotics. The company is also working on a HomePod with a screen for next year. This is a variation of that robotic device. This would not have the robotic arm, but would have a similar display and functionality. There's also several new versions of Siri in the works. There's a redesigned Siri visually for the iPhone, the iPad, and the Mac. There's new underpinnings to that Siri. We've talked about that. Apple has signaled that. This is a revamped Siri coming in the spring. There's also a new visual version of Siri for home devices. It uses something similar to Microsoft Clippy from 20, 30 years ago, if you remember that, that virtual assistant. Yep. And then you also, I know there's a lot, have a push into home security with a new home security camera system. Taps into a home doorbell as well. This would compete with Ring and Nest and ADT and other companies, and also serve as the sensors at the center of a home automation strategy.
So, Mark, you gave us a lot to think about. We have a couple minutes left with you. We don't have a crystal ball, but we have Mark Gurman, which is the next best thing. If there is sort of a single device in here that's iPhone-like in the sense of it being the center of the universe for Apple, does one of them stick out to you as that?
I don't think the iPhone in the next 5 to 10 years is going to go away as the center of the universe. What I do think is going to happen is the next generation of ecosystems, instead of being built around the phone and the cloud, it's going to be built around AI. So all the devices, right, including the phone, are going to get demoted a bit, and AI is going to become the center of the universe. And so you're going to have your phone, your home devices, your earbuds, your glasses, your watch, your computer, etc., and those are all going to be built around AI as the center, moving away from the phone and the cloud as the center.
So the prototype's all ready to go. They're getting up the assembly lines and they're going to hit the stores, right? They're all ready to go, or not yet?
In terms of these devices, everything that I'm talking about today, those are mostly forward-looking. We're talking about things coming out 26, 27. There's a mention in the story of a robotic arm for retail stores and manufacturing. That's probably 5 to 7 years away, so we're talking 2030s there. I mentioned the foldable iPad Mac device. That's going to be at the end of this decade. The foldable iPhone is going to be at the end of next year. This year in September, a little less than a month from now, Apple's going to introduce its first redesigned iPhone in several years. This is the iPhone 17 line, also the slimmed down iPhone, new AirPods, a new Apple Watch Ultra with a slightly larger display and satellite connectivity for hikers. So in the near term, some good stuff. In the long term, some much cooler stuff.
The hardware that you've highlighted is nothing without the software, Mark, and you've documented the struggles that Apple has had when it comes to its own work with AI software, talking about potential acquisitions. Can Apple pull off this hardware with the way the software is now?
Yes. So as I mentioned in the story, they're looking at 2 directions for revamping the underpinnings of Siri. One is called Linwood and one is called Glenwood. Linwood is using upgraded versions of the company's own internal foundation models. That's the team that Meta has been poaching a bunch of people from, including the head of the team. We talked about this a few weeks ago. Glenwood is using a third-party provider to rebuild Siri. So building Siri around models from a third party. And obviously third parties like Anthropic, like OpenAI, like Google, they've proven out their models. They work extraordinarily well. And so Apple's backup plan essentially is to go external till they're able to get their internal models up to snuff. And honestly, that makes a lot of sense.
All right, going to leave it there. Mark, thank you so much. Of course, Bloomberg's Mark Gurman joining us with the latest on his exclusive on Apple. Mark is Bloomberg News Managing Editor for Global Consumer Tech. He's out there on the West Coast. Shares of Apple have been as high as 2.3%, intraday high, rising on Mark's story. The stock still up, but now only a gain of about 1.4%. But we have seen Apple shares popping since August 5th. So we have seen a move in a big way to the upside for Apple over the last week or so. So interesting reporter. Check it out. It's on the Bloomberg and at Bloomberg.com. Also on the Bloomberg is what's going on out of the White House and about an upcoming meeting, Tim, between the United States and Russia. This hasn't happened in a long, long time, and certainly not on U.S. soil.
Yeah, with what to expect, we have Bloomberg News National Security Team Leader Nick Wadhams. He joins us from our Washington, D.C. bureau. Nick, I'm curious about not just the timing of this, but more importantly, the placement of this on U.S. soil. It's something that we've spoken quite a bit about in recent days, but I'm wondering if expectations have shifted with rhetoric that we've heard from President Trump just today, and also what we've heard and what we've reported about the president of Ukraine and what he would and would not give up when it comes to some sort of deal with Vladimir Putin.
Right. I mean, there's a big question about what we're actually going to get out of this meeting. I mean, when these sort of things happen, there's a lot of froth and ferment over the fact that, the two leaders are going to be face to face, staring each other down, adversaries or maybe not adversaries in the case of Putin and Trump. And the expectation is, they're going to come out of this with some big deal. But Trump himself has shown he's very willing to come out of these meetings with nothing. He walked away from a meeting with Kim Jong-un in Vietnam some years ago in his first term. And then obviously there was the Biden-Putin meeting in Geneva, Switzerland in 2021 that resulted in a document and some proposals, but really achieved very little. So I think what you're seeing is the administration sort of crashing up against reality, where in some ways they've portrayed President Trump to be the deal maker and the problem solver who's going to get this thing done. But then, given Russia's advances in Ukraine and President Putin's unwillingness to stop the war so far, you now see them trying to massage expectations a little bit, to make sure that this is not seen as a failure when, as seems likely, there is not going to be a major announcement from it. So you've seen the president describe it as a feel-out meeting. Marco Rubio echoed these words, and then President Trump again said today, we expect this to lead to another meeting between Vladimir Putin and Volodymyr Zelensky, and maybe Trump as well, where they may get down to brass tacks on a possible ceasefire agreement or some other deal that could lead to an end to the fighting.
All right, we're talking with Nick Wadhams, Bloomberg News National Security Team Leader. Here's just what President Trump had to say earlier today when it comes to the upcoming meeting with President Putin.
There's a very good chance that we're going to have a second meeting, which will be more productive than the first, because the first is I'm going to find out where we are and what we're doing. Again, this is Biden's war. This isn't my war. He got us into this thing, and it should have never happened. This war would have never happened if I were president. But it is what it is, and I'm here to fix it.
All right, that, of course, was President Trump earlier today. Nick Wadhams, isn't it President Putin's war? And isn't it just something that he is very clear about wanting to expand his territory? And what I have heard from most folks who follow President Putin, who are experts on President Putin, even folks like yourself, like that, he's not going to give up. He still wants a land grab, and he, I don't know, wants to remain president forever, and I don't know whether by having this war keeps him as president. I don't know. What's the intelligence briefing on this?
Well, the big question that a lot of folks are asking the president is sort of, well, what incentive does Vladimir Putin have to stop his campaign? He's continued to gain territory. I mean, and when you have a grinding war of attrition like this is something that plays to Russia's advantage. They have more troops, they have a bigger army, they have more materiel. They can really tap their own country to continue to fight this war, whereas Ukraine's resources are much more limited. So when you look at the long term, it may be very, very costly for Russia, and it really may squeeze the economy. But in the long run, experts largely agree that a long-term grinding war does favor Russia. So then the question is, what incentive does Vladimir Putin have to stop? Which then raises the question, well, if President Trump eases off the gas on military supplies to Ukraine, is Vladimir Putin's leverage actually enhanced, and he can really make some demands here? There's no incentive for him to essentially give anything up. Why would he withdraw from territory when he continues to make advances? So that is why there's a lot of questions about why President Trump is holding this meeting in the first place. He theoretically would have plenty of staff, other officials who could go to Russia or speak to intermediaries to understand what Putin wants. That's not really something that the president himself would need to do. And obviously, just the mere fact of having this meeting, it does give President Putin a bit of an advantage because it essentially cuts out Ukraine. So he's going to try to do some sort of a deal with President Trump, or at least get Trump to put more pressure on Vladimir Putin. Those are a lot of the concerns that we're hearing about, this meeting taking place in the first place.
Yeah, just interesting to see. I can't wait to see kind of the optics, in terms of whatever they ultimately come out and say. Hey, while we have you, just one last thing. There's a story that Reuters has been reporting out about the U.S. secretly placing location tracking devices in targeted shipments of advanced AI semiconductors that are at risk of illegal diversion to China. This is citing two people familiar with the matter, and they talk about commerce usually involved, Homeland Security, FBI may also take a part. Would this be a surprising thing? I just think all countries are doing things back and forth. But what's your read on that before we go?
Right. I mean, I think you have to see it sort of fits into a broader spectrum of the push and pull between the U.S. and China. I mean, there's so much sensitivity around these chips. Obviously, they do not want to lose track of them, and there's just so many questions about whether these chips are actually going to go ahead. We did have that deal where President Trump essentially extracted 15% from NVIDIA and AMD, but so many unknowns around that. But there are a lot of concerns about these chips entering the wrong hands, and obviously companies and U.S. government want to do everything they can to make sure that doesn't happen.
All right. So appreciate checking in with you. Nick Wadhams, National Security Team Leader there in our Washington, D.C. News Bureau.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Tsekova. It's a new ticker, but one we better get used to. For Paramount Skydance.
Strong start. The ticker is PSKY. Shares climbed as much as 60% today. Now they're up about 38%. Yesterday, we had another strong day. It's incredible. Things are moving very fast. The merger was approved on July 25th. The combined company started trading on August 8th, and they already have a blockbuster deal of $8 billion about the UFC fights. We're seeing some optimism there. Evercore is saying this is a loud message to Hollywood, sports leagues, Wall Street. That said, of course, this is happening in the climate of meme stock frenzy, and we're getting a little bit of that, right? This stock has high short interest. There were a lot of names like Opendoor Co. really soaring, and I think it's a little bit of that. Clearly, meme stock frenzy is not gone, and those numbers, 60%. Clearly it's hinting to that. But nevertheless, a very strong day for Paramount Skydance.
All right, strong day too for Amazon. Not as strong as Paramount Skydance, but nonetheless, we're seeing shares of Amazon higher today.
Yes, a little bit over 1%. The ticker, of course, is AMZN. The company plans to offer same-day grocery deliveries to more than 2,000 cities by the end of the year. This is pretty much doubling the current number at a very fast pace. The Amazon reaction is interesting, but the competitors' reaction even more interesting. Instacart, Kroger, Walmart, DoorDash, all down on the news. Obviously, that's a $1 trillion market. And currently only 20% of it is online delivery. It's an interesting service. It's going to be free under $25, and then you have to pay $3 fee if you don't reach that, which probably is kind of affordable. They, of course, have Whole Foods as well, so they have a big part of this market. But it's an interesting reaction so far in the competitors.
All right, and just got about 30 seconds left here. Kava,
pretty rough day for Kava. It fell as much as 22%. Now it's down 16%. Ticker is CAVA. A lot of pressure for those companies, Sweet Green. That said, if we look at the price target since the IPO, the company has quadrupled, but has had a really rough start of the year. The main thing, of course, is the company trimmed its annual sales guidance, and established locations will expand at 6%. They previously said 8%.
We're going to add in one more. The ticker is UAMY, U.S. Antimony Corporation. We just talked with the CEO of the company, and I got to say, coming off of our interview, we're seeing the stock rally about 3.25%. It's very clear in terms of the move to the upside.
Yeah, if you missed that interview, you can check it out on the Bloomberg terminal and at Bloomberg.com. Gary Evans joined us, the CEO of United States Antimony.
All right, check out our Stock Movers podcast, 5-minute episodes of some of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. A headline crossing the Bloomberg: traders fully price in a quarter-point Fed rate cut in the month of September. But let's not forget, we've got a few data points And we've got Jackson Hole.
I was just going to say, Jackson Hole comes before then. Kava's down more than 50% from its all-time highs in December.
Want to know what? I'm hungry. That's all I'm going to tell you.
Well,
That's
there's
my
not one
takeaway.
near us.
No, I know. Got to go up to the pantry. Hey, the close is coming your way on TV. This is Bloomberg.